up with story number one. We're going to go to Jean Gruss with this story. Jean, this is a story coming out of the Real Deal. I'll read you the headline, first couple graphs, and I want you to comment. Headline: Highline launches $350 million distressed commercial real estate fund. Subhead: Fund will target capital-hungry owners of office, retail, multifamily, and industrial properties in the Southeast. Now, let me read you the first couple graphs. Jean, then I want you to comment. Miami-based Highline Real Estate Capital launched a $350 million investment fund that will target owners of distressed commercial real estate in the Southeast. Through its new Highline Real Estate Fund number 1 LP, the firm will provide equity and debt financing to commercial property owners struggling to sell or finance office, retail, multifamily, and industrial properties, as well as acquire properties. Story goes on to say, and this is a quote that comes from David Moret, the principal of Highline. He told The Real Deal, "We have extensive direct operating histories in the office and retail, and so those types of investments we would buy directly as well as with other partners." And story, finally, just to wrap it up, Mr. Jean, and then I'll ask you to comment. Mr. Morrell says he expects Highline to make industrial and multifamily property investments with partners. He added, multiple interest rate hikes by the Federal Reserve since March of 2022 have flattened the value of commercial real estate property sales in recent months. Higher borrowing costs have lowered bids to buy commercial property, which many property owners have resisted. John, is this the start of effectively the buildup for distress? And what will it mean for real estate prices if this fund, as well as others that are currently being thought of, go forward?
Yeah, I mean, this is just a canary in a coal mine. I mean, sophisticated, smart investors who've been in the business a long time know what's coming when interest rates rise. And, when they're actually putting their money where their mouth is, it's very telling. I mean, I think, I would certainly believe those guys more than sort of the economists that are out there that really don't have any money on the line. I mean, these guys are going to put $350 million bet on the fact that there's going to be distressed properties. And, we've seen this cycle before. It's the cycle of rising interest rates, and that's going to depress commercial real estate values. And owners of commercial real estate who bought at the peak and need to refinance are going to be, they're going to be in distress. So there will be a lot of opportunities. And I think a lot of people are raising capital to be prepared for that moment. I mean, when that's going to happen, I mean, I think it's already happening now, but in the next couple of years, I think it's just going to be, it's going to happen. So, this is really sort of a canary in a coal mine. It's something to pay attention to. The couple things that really struck out to me, it's not just office properties, but they're also talking about multifamily and industrial, which have been like two super hot areas. And, I was a little surprised because industrial particularly was sort of the darling of commercial real estate. And, now you've had some commercial real estate industrial users that have cut back, Amazon being one of them. And so I was really interested to read about that, and also multifamily, because I think, we've seen quite a bit of multifamily construction recently. And I'm not sure that developers of multifamily are going to be able to fill all the apartments that they think they can, and the massive supply that's coming. So it was really interesting to read that it's not just in the office sector, because I think a lot of people have said the problems have been mostly limited to the office market because of work from home and COVID and all that. But I think it's more widespread than that, and these investors seem to think so too. So that was very insightful, an insightful part of the story.
Now, I want to read one more graph out of the story and open this up to the floor if anybody wants to discuss it. An article or a graph in the story says, another real estate investment fund similar to Highline launched in South Florida this year. Arnold Carsanti's Miami-based 13th floor investment, which built a lot of residential. They build condos. They also build rentals. They launched a $300 million fund aimed at opportunities in the growing market nationwide, as well as distress in South Florida and elsewhere. Highline, the company that we're talking about here, they kind of do everything. But we're talking about a residential developer. We've been very active in South Florida, actually put together a $300 million fund to go after a distressed product as well. Anybody want to comment about that? Anybody want to talk just about what they see going on? Is, three makes a trend. This is only two. What says the round, or what say the roundtable? Yeah, well, interesting piece. So there was a related report that came out last week. MSCI Real Asset estimated there's about 80 billion in distressed commercial real estate nationally right now. That office was the largest percentage of that, followed by hotel, and then multifamily and industrial were farther down the list for those reasons that John just described. So, and yeah, we've been hearing a lot about office distress in other parts of the country, not in South Florida, but in, Chicago, LA, Atlanta, DC. And very much focused on office just because of work from home. So a couple things I wondered about after reading that, like, I just don't get the sense that there's a whole lot of distressed real estate in South Florida right now. We're still in boom mode, even the office sector. I just, wrote about the latest office numbers. We're at record high rental rates in the South Florida office markets. Vacancy rates aren't that high. So I'm guessing these funds aren't really targeting a whole lot of distressed office in South Florida. And I don't get the sense that there's a lot of distressed multifamily here either. So I'm just, I mean, yes, I think there is distressed property out there, but I don't know if there's a whole lot of it in South Florida.
I
Interesting.
wonder though if this is sort of a preview, a forecast, because I mean, do they want to have some dry powder for next year? And how quickly are they going to deploy that capital? I don't think the story said that. So maybe they're seeing something coming down the pike, 12 to 24 months, and they want to be ready and have the cash on hand to sort of strike when the opportunities arise.
And John, just to add a point to what you just said, if you look at the name of this fund, and I said it, you're reading the article. This is number one. You got to wonder too if it's not the first round in order to plant the flag, establish your reputation, claim the space, and then therefore later on, anybody who might be interested in terms of money guys, investors, men and women, they could ultimately follow suit with that. So that's an interesting point